Hey traders from all over the world, my name is Jerremy Alexander Newsome. Thanks so much for clicking on this video. I'm super pumped. Don't mind the little fro I got going on. I don't know what's going on with my hair today. I wanted to make you a series of videos entitled All You Need to Know About Day Trading, and yes, they are entirely free. Here's one assurance I can make for you right now. When you watch this video, there is zero sales pitch, and there is zero sales pitch in any of my videos. My only request is that you simply share the information of real life trading, tell your friends, like us on Facebook, the whole social media thing, subscribe to us on YouTube. My handle on Twitter is @NewsomeNuggets. I'm not selling you anything. I want to teach you how to day trade because I truly do believe in education. I actually wanted to be a teacher myself until I realized how much they got paid. And unfortunately, I think that it's horrendous how much teachers get paid. Way, way, way too little. I mean, I'm talking across all spectrums. Anyway, not going to go down that tangent. I'm here to teach you how to day trade. And I'm going to do it in 4 videos, and it's going to be free, and it's going to be less than 4 hours. There's no deal like this on the internet. You've chosen the right class to watch. So let's go ahead and get started. I'm going to hop into some charts and check it out. So let's go ahead and hop over to some gaps that we're looking at today, actually. Now notice that I said gaps, G-A-P-S. Why did I say gaps? Well, this is the interesting thing about day trading. Now again, this video is entirely based on my opinion as a professional trader, and I've been trading for about 6 or 7 years now. But when it comes to day trading, and really when it comes to the market in general, there are so many things. There are so many opportunities. There are so many things you could do. More opportunities every single day than you could take advantage of in a lifetime. So how in the world does someone know what to trade and when to trade? Now, I could show you scanners. I could show you truly countless things to trade or how to trade. Here's the specific note that you need to take if going any farther in this video. The market rewards the specialist, not the generalist. Become really, really good at one thing, make money with that one thing, and then you can go ahead and learn whatever it is that you want to learn and dilly-dabble, or is that the term, dilly-dabble? I'm not sure. Anyway, I'm going to fill you guys in. So when I day trade, and really when I swing trade, really all of my trades, they are based and they're formulated from a gap in price, G-A-P, or as I like to refer to it as, gap action. So a gap, the reason I like to focus on gaps is because people get afraid from gaps. The majority of traders don't know what's going on a day-to-day basis. So they go through their job, right? Let's say you work for a lawn care company. I have a friend who works and owns his own lawn care company, many of them actually. And he calls me about once a month. He's like, hey man, why did this stock do this, right? So he has shares of that stock. And randomly, he'll look on his phone one day and it's up 23%. He has no clue why, right? So what does he do? Well, he sells because it's a profit. And he does not know why he's profitable, but he reacts emotionally. Gaps create emotion. They do. They create emotion. They scare people. They frighten people. They worry people. People don't know what to do. So when I'm day trading and swing trading, what I do is I look for gaps and I rate the gaps. I rate the gaps. I create a rating system and I figure out how to play them. Now, here's what's very interesting. My rating system is quite simple. It is based off of 2 factors. Many rating systems out there, and again, I'm not here to say anything negative about any other company or analyst, education out there. I'm actually friends with probably the majority of them. So if you say, hey, have you ever heard of this person? The chances are I probably have. But what I'm here to say is I'm doing my best to make it as simple as possible. That's how I learn. Now, I fancy myself as a semi-smart person, but I'm definitely no genius. I need a lot of help to get the smallest things right. So whenever I was in school, I was the guy who sat up front and asked like 14 different questions every 7 minutes. My hand was always up because I'd really have to reiterate every single thing I was learning. So when I started becoming an educator and teaching people, teaching adults mostly, I understood that, you know what, I wasn't really that different. The education system, in my personal opinion, has a lot of things to choose on. You know what, I'm going down that rant again. I'm so sorry. I'm a big fan of educational reform. One day we'll get there. But as of right now, my goal is to keep it as simple as possible when trading. As simple as possible. So I have 2 types of gaps that I look for. Are you ready? Here they are. The 2 types of gaps. And right now we're looking at the chart SPY to make this really, really easy. The SPY is an ETF that tracks the S&P 500. Standard & Poor's 500. So 2 types of gaps. You have, and I'll write this down, retest gap. And then you have something called gap and go. Now again, guys, these are just terms that I use. You could use and call these things anything. You could call it the hibiscus and the daylily. You could call it the mashed potato dance. I don't care what you call these gaps. It doesn't matter. I'm not saying that this is the right terminology. This is just simply what I use. I know a lot of other educators out there, like I mentioned, who call this, they'll rank it their own different ways. It doesn't matter, okay? Retest and gap and go. Now here's what's interesting. I don't care about the names. What I do know is a lot of people fall short in explaining why they work. And that's what I'm going to dedicate a lot of time to today, because truly, I don't care what you're day trading, how long, why, or where. Understanding the why is crucial. It's the most important part of trading. Understanding the why it is the way it is. So you guys ready? Let's check it out. Check it out. Retest gap is when, I'm going to go ahead and write this down. Retest gap, when a white candle gaps up or when a black candle gaps down. So my job is to now explain the why. Why is that the case? When a white candle gaps up or when a black candle gaps down. The most important candle in any day trade or swing trade analysis is the prior day candle. What do I mean by the prior day? Well, let's say that today right now is actually Thursday, so tomorrow will be Friday. So if I hop over really quick to SPY on today's candle, so today is July 9th, 2015, we have a black candle. So if the stock gaps down, let's say 203 tomorrow, I don't think it will, but let's just say it does. Here's how I'm going to play it. For future references, I actually think that it's going to gap up a little bit. I think we're going to open around 205.46 and probably trade down a little bit more. Anyway, it doesn't matter. So opening at 203 tomorrow, what if that happens? What type of gap is that? Well, if we refer to our definition, black candle gaps down, it's a retest gap. Okay, cool. So I'm going to explain the why in just a second, but that is the prior day. The reason the prior day candle is the most important is because those are the people who are most affected in the trade. Those are the people who have gotten into the trade the most recently and are the most affected by the up or the down movement. So let's say, for example, someone went bearish yesterday on the SPY. So they actually sold the stock short. Now, I'm going to pause here for just a quick moment. If you do not know what selling short is or how to do it, boop, click that link right there in the video and go watch my video on how to sell short. I'll explain everything in the video, and you can hop back over here and understand what I'm talking about, because yes, you can make money with it regardless if the stock is going up or going down. So let's say someone sold short this candle, meaning they got in bearish, meaning they want to make money as the stock goes down. How would they feel if the stock opens tomorrow at 209.49? Now, I'm 99% sure that won't happen, but if it did, how would they feel? They'd be upset. It'd be a rough morning for them because they're losing money, and they're losing a lot of money, right? Stock gapped up 5 points. They're hurting, right? They're down pretty hard. So they'd be worried. They'd be upset. They'd be scared. Those would be the people most affected. Why? Because they got into the trade most recently. It's kind of like if you had a, I don't know if it's a good example or not, but let's say you're in a relationship and day one, you get into a relationship, everything's going great. And then the very next day, boom, she breaks up with you, or you break up with, whatever, right? That's a big effect because you're like, well, what the heck? I thought everything was going great. Day one in the relationship, we're good. Right? Most people don't break up in day two. Most people break up a little bit farther, but that person will be the most affected. The reason they are is because they go into the trade thinking, oh my gosh, I'm selling short. If the stock goes down to here, if it just trades down lower, man, I'm going to make so much money. I'm going to be able to buy a plane ticket to Honolulu, Hawaii for me and my wife. We're going to go on a vacation. I'm pumped, right? That's what they think about. They get emotionally invested into the trade, so they're the ones most affected by the trade, the prior candle. So the prior candle is very important. So black candle, gaps down, retest. White candle, gaps up, retest. So this gap right here, I'll give you guys 3 seconds. What type of gap is that? White candle, gaps up. That is a boop, boop, retest gap. Yes. Let's explain the why. Why is it a retest? Now again, guys, that's the classification, retest gap or gap and go. Here's the why, and in class 2, I'm going to explain the how to trade these things. So really in class 1, I'm just breaking it down for you guys to let you know what a day trader looks for, what a professional trader looks for, what a real life trader looks for. Real life trader? That's the name of the company. Anyway, so the stock gaps up. So let me give an example, going back to my friend who owns a lawn care company. Let's say he bought some shares of SPY on this day, the 2nd of February. So he bought some shares that day. The very next day, so he's emotionally invested, right? He's tied into he buys 1,000 shares, spending how much would that be? $20,000. No, $200,000. Yeah, he'd be $200,000 if he bought 1,000 shares. So let's say he bought 100 shares, $20,000. So he bought 100 shares of this stock. And he spent 20 grand, and he's thinking to himself, man, this would be great if I could make some cash money off this trade. The next morning, the stock gaps up, and he's already making approximately, let's just say, $300 on the trade. Okay, just it'd have to move $3 to do that. So let's say that he bought in at 200, and the stock is opening at 203. Okay, so he's up $300, but he's up $300 immediately. The general investor, the person out there who doesn't follow this every single day, and again, there's nothing wrong with that. My goal at Real Life Trading is, our mission is to enrich lives. That's our mission statement. But also, I'm here to educate as many people as possible about how this works. So the stock gaps up. What is he thinking? Oh my gosh, why is it up so far? Why is it gapping so much today? Oh my goodness. Well, I'm at a profit. I have no idea why it's up. I did not expect it to go up this fast. I have a profit. Can't go broke making a profit. So what does he do? He sells. He sells. And this causes the stock, right? So you have your investor who buys. They buy here. Stock gaps up the next day, trades up a little bit, and then they begin to sell, causing the stock to go lower. As the stock goes lower, at some point, people who have not bought yet, they say, oh, this is a great time to buy. They buy, causing the retest, and that's the trade that you're looking for. That's the trade that you're going to buy. Right there, SPY. Beautiful. So it's a retest. It's a retest because people are profitable. That's the why. People are profitable, so they're going to exit their positions. And when you exit your positions, you have to do something opposite of the gap usually. So in a black candle that gaps down, people are profitable are bearish traders. How do bearish traders exit their position? Well, if you watch the shorting video, if you haven't, it's okay. Pause it. I'm not going anywhere. Go watch that video. If you know how, a bearish trader shorts the stock. They sell to open. Sell to open. When the stock gaps down, they are super surprised. Oh my goodness, I'm making so much money. What do I do now? So in order to exit that trade, they buy to close. So the buying pressure actually causes the stock at some point to trade a little bit higher, retest, and then roll over. That's it, guys. That's as simple as it is. So if it's a black candle and it gaps down, it's a retest gap. So what does that mean exactly? What does it mean? What it means is if you're day trading, if you are day trading or swing trading, wait for the retest. It means be patient. So you guys are watching the day trading video, you're looking to day trade. Okay, there we go. It means be patient. I like to spell patience like this. P-A-Y. Be patient. Yeah, you like that? So you can get paid. Be patient. Wait for the retest. It's coming at some point. On some time frame. It's going to happen. So just wait. Don't worry about it. Don't freak out. Let it come to you. Create your plan. That's what day traders do. That's what real life traders do. That's what professional traders do. They create their plan. They know in advance what they want to do and why. And when it happens, boom, they pull the trigger and they make the move. Okay? So if you're day trading, wait for the retest. Be patient. That's what that means. That's the understanding of what you do. Now, a gap and go is a little different. It's very, very similar properties, and we're going to break this down a little bit more for you in class 2 with everything that we're going to be using. But with the retest gap and then the gap and go, here's the difference. The gap and go, there are more people trapped. More people trapped, higher probability gaps. Gap and go, there's more people trapped, there's a higher probability of gaps. So both gaps are great, by the way. I play both of them pretty much every single day. I'm just simply letting you know if I'm ever saying, hey, this is a gap and go or retest, you'll know why. If a gap and go, more people are trapped. What the heck does trapped mean? Well, let's break it down for you for just a moment. Trapped. Let me go find someone who is trapped very nicely. Okay, here's one good example. There's a few good examples. This is the first one I found. right here. Boop. There we go. So notice this gap. Keep in mind, I do not care about the color of the second candle. A lot of instructors, sorry, I had to get some water. A lot of instructors, they teach using the candles that are already here, and they always talk about what's happening now. What's important, traders and students, people watching this video, is I cannot foretell the future, but what I can do is create a plan and follow it. And what I will simply say is I personally think I'm one of the best stock market teachers there are. I'm sure there's many better than me, but I'm definitely top 10. And the reason that is, I'm just being as humble as I can, top 10, maybe number 9 or 8, okay? I've made the board. But the reason I say that is because I don't care about the current candle. What I care about is what are people thinking, the why of the market, the why. All right, I can show, I could show you right now, I could have done this and I could have done that, and this is how much money I could have made. You should buy my product and make me money, right? That's not my goal. My goal is to teach people the why. Why are people upset? So in this scenario, here's an SPY. Look at this. Beautiful stock. Stock goes higher, comes down, right? And you get a nice little white candle. Boop, right there. So what are people thinking? Well, obviously, this white candle is created from buying pressure. All white candles are created from buying pressure. All of them. If you have a white candle, that is a buying candle. It's a bullish candle. You can tell for 100% certainty if it's a white candle that someone on that day bought there, guaranteed. Let's call that person Sally. Sally bought there because Sally thought that the stock was going to do this. Was that a bad thing? Was Sally a bad person for doing that? No. No, not at all. She was just trying to buy the bounce. Well, the bounce just simply didn't work. No big deal. It works later for Sally. Boom, boom, bounce, right? Boom, boom, bounce. So that one time it just simply didn't work for her. So a gap and go. Here's how I classify a gap and go. When a white candle gaps down, or when a black candle gaps up the next day. So why is that important? Well, if you have a white candle, you can guarantee that people are buying there. 100% certainty. People bought on this day. Boop, they bought. So the next day when the stock gaps down, how are they feeling? They're probably making a sound similar to that. They're losing money. They're upset. They're worried. How do they exit the trade? They sell. Why? Why? Of course they would sell. They're losing money. They don't want to lose more money. They're afraid, right? Remember I said at the beginning of the video, gaps create emotion. People are getting emotional. They're afraid. They don't want to lose money. People don't like losing money. People don't like being wrong. You got to get over those fears before you can trade profitably, but that's in the future. So SPY, white candle, gaps down, trapping people, bearish. People are losing money. Okay. So that's a gap and go. People are trapped. That's what trapped means. Trapped means when a stock gaps and there's really nothing else someone can do other than exit the trade. They're like, well, I'm losing money. Might as well exit because they have no other choice, right? They're just losing money. So are there any gap and goes in the opposite direction here? Well, yes, right? Here's a gap and go right there. A white bullish gap and go. So black candle the prior day, stock gaps up the next day, trapping the bearish traders, gap and go. Here's a retest gap. Here's a gap and go. Here's a retest gap. Here's a gap and go. Here's a retest gap. And what's beautiful about these gaps, again, ladies and gentlemen, is not only do I day trade, but I also talk about swing trading. I do a little bit of both, right? We have a day trading class and we have a swing trading class. We have both. Both of these are formulated from gaps. So notice that this is a retest gap right there. I'm going to say to myself, okay, swing traders, this is a retest. Wait for the retest. Very next day, stock pulls back a little bit. That's the retest. You could also play this little retest right there. You could have played that retest. Trying to find another one. This retest gap, right? Stock gaps up, retest, boom. You could have waited for the retest into here. You buy in here, stock goes higher. Bearish retest right here, stock gaps down. It's a retest gap, trades up, rolls over. Right here, bearish trade, stock gaps down, retest, rolls over. So these gaps do work. They do. And I don't have a percentage right now. It doesn't matter, 50-50, who cares? They work. And it's not a complicated system. It's very, very simple. Those are the type of gaps I look for. Now, here's the key. You guys ready? I'm doing this all for free. Ready? I'm going to show you exactly what I do every single morning. Here we go. Every single morning, I click on and I go to a pre-market gap list. Now, this one's free. The reason I use this one for free is because, again, my goal and my objective is not to sell you guys anything. I'm showing you that you can trade for free just like everyone else if you want to. If you want to be in a trading room, there's plenty of them out there. I have one. It's great. Here's the opportunities in front of you. You can go to this website, thestockmarketwatch.com/markets. I'll zoom in for you so you can see the link. But you can go to this website and you can see what's gapping before the market even opens. That's cool, huh? So if you do that, if you can go in and plan, okay, this is happening, this is happening, this is happening, you can determine your trading plan based on the gaps that are available and find out exactly what's happening and where, and you can analyze everything in advance, and that's a good thing. So these gaps were from this morning, I believe. So let's go over and look at QLGC, just as an example. So before I break it down, before I actually hop over there, let me just look at this just for 1 second. What I do actually is I go through the bearish stocks first, and then I go through the bullish stocks. Not that it matters. If you want to do it that way, you can. Bearish stocks usually move much faster than bullish stocks. Bearish gaps usually work much better than bullish gaps. I prefer bearish gaps, always have, probably always will. I just like bearish trades better because people freak out more when the stock's going down. And I like people who freak out because if they're selling, I'm selling. So let's go look at QLGC. Now what I do before the market opens is I'll go pull up the gap, QLGC, GC. So I open the chart, and before the market opens, right, the market hasn't opened yet, I'll look at the stock. And I'll say to myself, what do I want this stock to do? What do I want the gap to be doing? So I'm saying to myself, I want this gap to be gapping down, preferably below this wick right here. Why that wick? Well, this is a buying pressure. This is buying. So when you gap, in order to trap people, in order for people to really be scared, and if you're going to trap somebody, you've got to get past pivot points. Pivot points are also called support resistance prices. I use both names interchangeably. So I'll talk about those in just a few moments. I'm assuming most of you here know what support resistance are, but if not, I'll break it down for you in just a moment. So QLGC, I want to get past some support resistance zones. So let me go ahead and just zoom out really quick, and we can see what happened. The stock gapped down, and what type of gap is it? Well, it's a black candle, gaps down. It is a retest gap, exactly. So you'd have waited for some type of retest, which you can see did happen on QLGC. It did retest before it went lower. So let me draw the support resistance lines on QLGC. Here's one, which is the wick of that candle, very, very strong support resistance line. We have another one in this gap down here. So a support resistance line is simply where a stock stops moving. It's where the stock literally pauses because of buying and selling pressure. So here are the support resistance lines as I have them at the moment. And you can see this 1521, resistance, resistance, resistance. So resistance is where a stock finds more selling pressure than buying pressure, and that drives the price a little bit lower. Buying support is where a stock finds more buying pressure than selling pressure, and the stock usually tends to bounce. Again, if you have any questions about the really easy basic concepts of trading, feel free to click that link right there, boop, and you'll get popped over to our beginner section and check out some of that stuff as well if you're just looking for some beginner info. All right, so there's QLGC. It's a retest gap. It gapped down. That's a retest gap. So that's what I do, right? Pre-market, before the market opens, I go in and I look at every single gap. I say, well, how is this gap? What does it look like? What's my plan? And see if it follows through with the gap or not. Let's go look at on this. I'm trying to see a stock that I actually recognize. I don't really recognize that many on this list right now. Checking WBAI. I've definitely looked at that one before. I did not trade this one today, obviously. WBAI. Oops. Let me try that one more time. So WBAI, 500 COM limited. Let's look at the gap, and let's just simply talk about what type of gap it is and if it cleared pivots or not. So it was a white candle, and it gapped up. What type of gap is that? Retest gap. Absolutely. It's a great retest gap. What I would have preferred on this stock is actually gap down. So notice strong bullish candle. Strong bullish candle. There's some support from over here from earlier. So you have a support line right about there. So if this stock gapped down to right here, notice there's nothing really stopping it until you get down to your next support level. There's not a lot there. So since we're talking a little bit about that, let me go ahead and just fill you guys in on some rules and some gaps and things of that nature. So if I'm talking about the size of gaps, here's my definition. I have been changing this recently. I don't necessarily care about the size, but you do want some size there. The size of the gap, the best thing is to clear the most recent and obvious support level. I'll put pivot point. I'll show you what that means in just a second. Pivot point. I'll draw that in here. Gaps between 4 and 22% are good. So if a gap is between 4 and 22%, it can still be less than 4%, give or take, but 4% is a good range, 22% is a good range. If it's over 22%, probably should just move on. So let's go back to, what was that? QLGC, I think. Yes. I think that's what it was. Oh gosh. Oh no. All right, QLGC. So this stock was down today, I think 22% or something at some point. 21% at $11. So it was really right on the verge of too far. So if I hop in here to the 5-minute, and we'll get to all the time frames in just a few, in just a little bit, don't you worry. Here it is. Here's the 5-minute chart. And this is a time frame that you're going to be getting very, very used to very soon. And you can see that it did retest. So it would have worked, but you can see that it didn't work that great, right? It did get some retest in here. Right here, traded up, pulled in, traded up, rolled over. So you might have been able to make some really, really quick profit there if you were fast enough. Maybe you got something right here. So there are some opportunities to retest. But bottom line, if it gaps over 22% or near 22%, it's kind of on my list. And really that list is, if I don't love it, I'm not going to trade it. So don't let it gap too far, is what I'm trying to say. There we go. I think another gap today was HVAX. I forget what it was. Let me go back. I know I can go to this list. Okay, so let's just talk about this list for a moment. So once the market opens, this list is really not valid anymore. It's not that great. So I go through this list. I try to find what's gapping. How is it gapping? Is it a gap and go? Is it a retest? Are we clearing support resistances? What are we doing? Once the market is open for about 10, 15 minutes or so, these lists, I don't know why I had an accent when I said that, these lists get refreshed. So these are also free. This is the gap up and the gap down list. This is barchart.com/stocks/gap up, all that good stuff. So these are available for free. Okay? Totally free. So one of the gaps today that we traded was NVAX, and this is the one that I want to show you when I refer to, this is what I was trying to look at, clearing a recent pivot. This was a phenomenal gap, just worked gloriously all day. There we go. Notice the black candle from yesterday. Notice that it cleared its most recent pivot. So a recent pivot is if a stock does this, trades down a little bit, and gaps above here. Money. That's what you want to see, especially if this candle is black. If that candle's black, that's the best type of gap. Watch that gap all day long. Same thing with the bearish trade, okay? Stock's coming down, trades up, and it just clears the most recent pivot. Those are my favorite type of gaps ever. Those are the ones I watch all day. Now, here's what's interesting. This is very similar to another kind of strategy, if you will, or just Newsome nugget. One of the best type of gaps that are possible, in my opinion, are the ones where someone gets confirmed in one direction or another, and then the stock moves in the opposite direction. I'm trying to find, let me see if I can just find one on NVAX. Let me let you know what I mean by that. When I say confirmed, if you can look at the candle from yesterday and you can say, oh yeah, I would have gone bullish there, or oh yeah, I would have gone bearish there. And then the next day the stock goes, no, thank you. I'm actually going a different direction now. Those are some really, really good examples. I might not be able to find one on NVAX. Let me just keep looking for a little bit. We're getting to a little bit of a cheap one. Trying to think of the most recent stock. I'm sure I'll find one in a little bit, but anyway, doesn't really matter. Let's just focus on this one. This is helpful. I'm sure we'll find one in the example. This is a good one. So notice we have a little bit of a pennant pattern, and we're gapping right above the recent resistance. This candle was bearish, so it actually was a gap and go in of itself, right? So it was a white candle yesterday, and it gapped down. So that's why this was a bearish trade, because today gapped up above a pivot. Yesterday was a black candle, and yesterday was a gap and go black candle. So not only was it just a normal black candle, but you can rest assured that someone definitely got embarrassed there on NVAX yesterday, because it is obviously a bearish black candle. Someone had to be selling there. So in order to get out of that trade, they had to buy to cover, right? They had to buy to cover, causing the stock to go a little bit higher. Let me go look at another one that we traded today. I don't think any of the ones that we traded today were trades that people got confirmed that one direction or another, and then the trade went out, but I'm sure I'll be able to find one. Let's see here. This is Walgreen Boots. I'll show you the gap in just a moment that I'm looking at. But if we can find a confirmation candle, you know what? This is a really good example. It's probably the best example I'll find off the top of my head. I probably should have had one earlier. But here we go. So let me zoom in just for the moment. And this is kind of what I'm referring to when I refer to the best gap. I mean, these are the best gaps possible. Notice we have this little trend moving up, moving up, moving up, boom, boom, boom. Everything's going good. Then you have a little bit of a gap and go right there. And then everyone's saying, oh, this is a retest gap. Well, not everyone's saying that, but some people are. There's your retest gap, right? So retest gap, white candle gaps up, it's a retest. A lot of people are like, this is a pretty decent support. Probably should not break that support. Well, this candle does. This candle decides to be a rebel. It actually closes below that support. So let's talk about confirmation candles on the next or the prior day. Confirmation candles, if they're bearish, they make a lower low and a lower high. So you have a lower low and you have a lower high, and they are obviously black and bearish. So they're selling candles. Then the next day, you have a good gap up. So not only do you have a gap and go, which is obviously strong, but if you can look at that candle and you go, man, someone would have went bearish there. Man, you know some people are trapped. Just thought of a good example. Okay, I'll go look at that in just a moment. Walgreen Boots Alliance, really quick. Let's talk about this gap, folks. What type of gap is this? That is a gap and go. Yes, absolutely, gap and go. Black candle, gapped up. Bearish traders are trapped. Did it clear a recent pivot, yes or no? And the answer is yes, it did. So there's your recent pivot. That's the most important pivot that you want to clear. The more pivots, the merrier, right? The more areas that the stock stopped moving. If it gapped down, you would have wanted to gap below this pivot right there. You would want to get in here somewhere. Would have been a little bit better of a gap. So today on Walgreens Boots Alliance, let's hop over here. This is Walgreens Boots Alliance. I don't know. Weird. So it's a black candle and it gaps up. What type of gap is that? Well, it's a gap and go. Yeah, it's a gap and go. So you would have had a bullish perspective on Walgreens Boots today. Was yesterday a bearish confirmation candle? Kind of. I could see how someone would get trapped in there. So you're making some lower highs. Yesterday was a black gap and go. It did make a lower low. It did make a lower high. So yeah, it makes sense that today's trade worked. Did it clear a pivot? It did. So the open of today was 90. So it cleared this pivot. It cleared these pivots, obviously. And it also cleared these pivots over here. So it cleared all of those pivots when it opened. So that was a one to be watching all day. That was a good gap. So this is one that, notice, it's not on the pre-market list, so it's not really here, but it's on the gap up list, right? So you go to the gap up list, boop, it's right there. So realistically and truthfully, you go through the morning before the market opens, you can go find a gap. And my goal, and I would just go ahead and say this in this video, have anywhere between 1 and 6 gaps in the morning. 1 and 6 gaps. Don't overwhelm yourself. Narrow it down to the absolute best ones. If you have more than 6 gaps, you're not going to get anything done that day. Have about 6 gaps. Focus on those for a little bit. See what they do. Are they doing what you wanted them to do? Are they doing what you planned them to do? If the answer is no, well, then don't trade them. Move on. Go look at these gap up, gap down lists and find a gap that you do like. Okay? So we talked about the pivots. We talked about people being trapped. We talked about the gaps. We're going to talk about two other things, and then we're going to hop into class 2. The two other things that we're going to talk about are the time frames that we use and then the moving averages that we use. I'm going to write those down, and we're going to get ready for class 2 because I don't want to hold you guys too long. So the moving averages, I do use some moving averages. Now, I usually mostly use moving averages for confirmation. I'll explain to you a little bit more about what confirmation means later, but put it to you this way. It's kind of like if you go and you said to yourself, yeah, my car has gas in it and it works. Confirmation is turning it on and actually seeing that the car works, right? Turning your car on and it works. That's confirmation. So having a good idea that something's going to happen is great, but actually hearing that engine roar, or if a weatherman says there's a 100% chance of rain, and once it rains, that's your confirmation, right? Because we all know how correct weathermen or weatherwomen can be at some time. All right. So the moving averages that I use. Now this is going to be important. I'll explain this. I'll look at Walgreen Boots Alliance in just a little bit. So I use 5 moving averages through all of my trading, and just kind of understand how they work and where we are. 10, 20, 50 exponential moving average. Okay, moving averages I use 10, 20, 50 exponential moving averages. Why are these important? I will let you know that in just a few moments. So the other two that I use, I don't know why my computer's going so slow, but it is right now. So 10, 20, 50 exponential moving average. I also use the 100 and 200 simple moving averages. 100 and 200 simple. So the key with these averages, and we'll explain it a little bit more in level 2 when we talk about the setup, and we're going to talk about risk. That's really the only thing we're going to focus on level class 2 and class 3 is the setup and the risk. Because truly, guys, once you understand the gap, it's not that difficult. It's really not. People make trading difficult because it's in their mind. Trading is hard, just like professional football is hard, or any professional sport. It's only hard if you make it hard. If you enjoy it, you love it, you practice at it, there's going to be games that you lose. There's going to be times that you do badly. There's going to be things that happen, right? But your number one objective is to do something that you love. And if you love doing it, it's not difficult, but it might be hard. Hopefully that makes sense, right? Anyway. All right, so 10, 20, 50 exponential moving averages, 100, 200 simple moving averages. The reason these are important is, number one, they can all be targets. Number 2, I'll explain what that means in just a second. Number 2, if you are looking at a gap, it is semi-important to find out where those averages are. So I'll write that down. It's important to know where those averages are. If the stock is gapping down, you want the stock to be opening below the 10, 20, 50, 100, 200. So I don't know if I'm saying it right when I write that down, but it's important to know where they're at. When I say it has to be below, just make sure it's not on one of those averages or that it's traded to one of those averages. So the 100 and 200 simple moving average. So if a stock is gapping up and everything is above those averages, great. So it's just the exact opposite. So if a stock is gapping up like Walgreen Boots Alliance right here, everything is gapping up on the daily chart. The stock and the gap is above the 10, the 20, the 50, the 100, and the 200 on all time frames. It's above it. So that's a good thing. If the stock is gapping down, you do want the stock to be opening below. I can say at least the 10, the 20, and the 50. Bonus if below these. So that's just a bonus if it's below those. Trying to think of a gap down today that's a good example for. That fits within there wasn't a lot of gap down today. That's the interesting thing. Well, let me just show you what I mean on Walgreen Boots Alliance. Here is the 100 and 200 simple moving average. The blue line is the 100 simple and the red line is the 200 simple. I do use these. So notice that the stock is above all of them. So let's say it was gapping down today, okay? And notice this purple box. This is actually where I wanted the stock to gap to. Okay. I wanted to gap in that area. I didn't expect it to gap up. Not that it matters, but I just thought it was going to gap down. So notice that if it gaps down, it'd be below this pivot. It'd be below this pivot. It'd be below all the pivots. So first of all, would it be below the 10, the 20, and the 50 exponential moving average? The answer is yes. Is it below the 100 simple moving average? Boom. It's below the 100 simple moving average. Awesome. So you're clearing pivots. You're below all the moving averages. You're gapping. You're trapping people. There is some edge to this trade. That's the type of trade that you want to look for. So this is where I wanted the trade to go to. Just simply didn't go there. So hopefully you guys will know what I mean by that. You know, if it's below the 200, so if Walgreens gapped down to here today, it'd probably be too far at that point, right? It'd probably be past our 22%, so it wouldn't really be that ideal. I think there's another example of Kohl's. Here's Kohl's. And Kohl's, recently, this was an amazing, amazing, amazing gap. Stock gap down. What type of gap is that? It's a gap and go. So here's the most recent pivot that it cleared right there. Here's the other pivot that it cleared right there. And it opened kind of a no man's land. So it opened below the 100 simple and above the 200 simple. So it's a good thing if it's below all of them. I guess it's a bonus if it's below both of them. But just make sure that you are not opening right here and trading to the 100, what I'm trying to say. Because the 100 will be a target. So let me write that down. So I already wrote that down. They're all a target. Okay. If the stock has traded to a target for the day, do not trade it. That's smart. Don't trade it. So if you're looking at a strong support or resistance level on the daily chart, or you're looking at a strong moving average, aka the 100 or the 200 moving average, and it's trades to that level, don't trade it for that day. You're done. So for a quick example, right here on Kohl's, small little gap up, right? Retest gap. Let's say you played it as a retest gap, and then by the time you looked at it, it had already traded to the 200 simple. All right, if it already traded to the 200 simple moving average, it's at a target. Don't trade it for the rest of the day. Just leave it alone. Let it do its thing. I've made that mistake a few times. It just doesn't work. Okay, so just let it just move on. Let it do its thing. It's some pretty good advice. So I guess realistically, they're just solid targets. You'll know when they're there. Look at them. Be aware of them. But as long as they are not messing with the gap, everything should be fine. By the way, on Kohl's, if Kohl's moves below 81, what is this? 61.59. I'm gonna be a little bit more bearish than bullish. Stop would probably go right about here, and I could easily see Kohl's at least making it to the mid 50s if it starts triggering that price. Possibly. It'd definitely be more bearish than bullish. And I'm analyzing all that based on this gap right here. Gap and go. Perfect gap and go, in fact. So remember earlier I said that I was going to find you guys a candle that confirmed the prior day and then gap to the opposite direction. I have this candle. It was locked away in my memory, and I found it because this actually happened to me. Let me just go find where. It was a double top, and it gapped the very next opposite day, the next direction. I will find it. It's on Home Depot. How long ago? That might have been longer than I thought it was. Okay, I'm looking. It might have been a long time ago. I thought it was just the other day. Nope. Most certainly was not. There it is, right there. Perfect. Here it is. So you have a double top on Home Depot. It's back in 2013. Double top. Stock closes below the neckline. So that's a pretty bearish trade, right? Then it retests the neckline. And then the next day, boom. Make a lower low. Big bearish candle. That's a bearish confirmation candle. A lot of people probably got into that trade bearish. Now the blue line is the 100 simple moving average, so you can see how well it bounced off of that once right here. By the way, what type of gap is that? Retest gap, boom, gapped up, retest, continues higher. Love this stuff. Okay. Then the very next day, notice that candle, huge white candle. That's a gap and go. That's trapping people. That's what I mean by if the candle confirms. If you can look at that candle and say, oh man, someone got in there bearish yesterday, you can bet your bottom dollar that someone's trapped, and it's probably a good idea to race the horses. Is that the term? I don't know if that's the term or not. Anyway, there you guys go. That's what I mean by that. And you can see that the 100 simple moving average, acted as a good support, then the 200 acted as a good support, and then it became sideways, and then Right here on Home Depot is a phenomenal gap. This was a gap and go. Beep, right there. Black candle, gaps up, clears all pivots. There is no pivot to be found on Home Depot up there. Gapped about 10%, gone. Right? To the moon, retested, end up retracing more, pulled back, went even higher. Here's a nice little retest gap right here. There's a good retest gap. Here's a good gap and go. Here's a good gap and go. Here's a good gap and go. So you can see some of the gaps are small, but it's all about the sentiment. Just understanding what the sentiment is and just kind of seeing what's going on and what it's doing and all that kind of good stuff. All right, sweet. So ladies and gentlemen, that is almost the end of class 1. All I'm going to do now is talk about the time frames that we use, that I use the most. And I'm going to give you guys the exact outline of what time frames I look at when I'm looking at my day trades. I go to the daily chart. Okay. We're going to start looking at the hourly in class 2. So the hourly chart, very important. 15-minute, 5-minute. So those are the 4 time frames. So when I am actually in my live trading room and we're calling out live trades and we're looking at everything, here's the oftentimes the protocol I'll go. Someone will call out the stock. Hey, Jeremy, hop over to the stock really quick and look at it. Okay, cool. I'll go to the daily and I'll analyze the gap. Then I'll go to the 5-minute just to see how it looks. If it's setting up, it looks like it looks nice. Analyze the gap on the daily. Then I'll go into the 15-minute. See how extended the stock is. Hourly, how many people are trapped. Back to the 5-minute, set up the trade. There you go. It's an exact replica of what I do almost every single day. Daily, analyze the gap, 5-minute, 15-minute, hourly, and then back to the 5 to see how to actually set the trade up. And I'll alternate back and forth between the 5. Now, I will say, and also in class 2, I'll mention this, on a gap and go, I'll analyze the 1 minute for the first 15 minutes if the gap is flawless. We'll talk about that a little bit later in class 2. There we go, folks. That's your first class, all for free. Thank you so much for watching. I really do appreciate it. You guys absolutely rock. If you have any questions, please feel free to let me know. I'd love to help you. You can email me anytime at jeremy@reallifetrading.com. Feel free to subscribe to us, to our YouTube channel. I post free market updates about 3 times a week. Hop over to our website if you ever get the chance to, www.reallifetrading.com. All the information's free. I post a lot of articles and blogs there quite often, and we do have, if you want to call it this, the trade of the day. I don't know if it's not really the trade of the day, but I post all my charts and ideas right there. You can always go to the website, see what I'm looking at, see what kind of analysis I'm looking at. Here's all the articles right here, all for free, and it's all incredible. So if you have any questions, let me know. I'll see you in class 2, and until then, remember, love life, live life, and trade it.